are excited to have you here for the Friday Focus this month. And we have a special guest here to talk about a topic that I think is at least hot on people's minds, or hot on what's being pushed right now. Let's put it that way. That's why I called it kind of buyer beware. I know I've had at least 3 different clients call me on this topic in the last month. And so I figured it would have to be timely to talk about it again as we have in the past. And that is on precious metals, especially gold. Gold and silver really, but I think what is usually pushed is gold, which is interesting to me because oftentimes silver is the better buy. But if you want to, we'll start off, if you want to introduce yourself here and talk a little bit about your company and who you work with. I know we've had, I think, Ryan on before. I think you might have been on before too at one point.
Yeah, yep. Ryan's my business partner. My name is Chafin Kirkpatrick. I work with a company called National Gold Consultants. I own it with my business partner Ryan Long, who you maybe seen before. Michelle, I know he's been on quite a few of your webinars and recorded stuff. We work with financial advisors all over the country, trying to solve a problem that Michelle even pointed out in the email that you got about gold and silver should be a wealth insurance tool. And unfortunately, it's kind of like Michelle mentioned, it's kind of turned into a buyer beware situation where you need to be really careful in who you're talking with and how you're investing in it. And that's right in our neck of the woods. That's why we started our company the way we do it, is working with financial advisors. We're getting away from all of those schemes and all of that stuff, and want to work with somebody that you trust and that knows the ins and outs of gold and silver, what it's supposed to do, and you're educated in your investment versus succumbing to late night television, basically. So
Yes,
yeah.
or ads, calls. I mean, I think it's been coming in all different directions right now, right?
Yep. Emails. I mean, that's one of their biggest ones is they get you on a list, and if you've bought in before, or you give them any information, that list just gets bigger and bigger, and they're sharing your name with other companies, and it's dollars and cents for those guys.
Yeah, so I know we've had lots of videos in the past. I'll probably link some of them after, talking about the difference between investing and collecting, and commodities versus currency, all of that stuff. And I think we could maybe touch on things a little, but what I really want to hit is, the different integrity of the companies, which we've talked about this before some too. But there's a reason why we work with Ryan and Chafin. I want to say Chafin because my kids are into watching Family Matters. Do you remember that? And
Oh
then
yeah.
Steve Urkel turns into Stefan, and for whatever reason, that name just is ringing in my head right now. So I apologize.
No, that's fine.
But that's the name that keeps ringing in my head as soon as I look at your name. But
Yep.
anyway, but there's a reason why we've worked with them, because this industry, the metals industry, gold and silver, when you think about like financial products, there's a lot of regulation, of course, with banks. There's regulations with investments, with annuities, with life insurance, lots of suitability, lots of, continuing education, all of that stuff that as an advisor, I have to keep up on to do to, we have audits, we pass CE exams all the time. We're going to training, but that's not really the case in the metals world or in the gold and silver world. Is that correct? Like, if you want to.
Yeah, that is correct. It's interesting. It's an unregulated industry. It's kind of the wild, wild west out there when it comes to gold and silver. And each state in the country is different. We're based out of Minnesota, which is one of the more highly regulated states. So they require licensing for all of our staff to be able to sell this product. But big states like California, Texas, Florida, things like that, they don't require any type of licensing to sell gold and silver. Physical gold and silver, they don't look at as a commodity, so it's not protected by the SEC. There's just no regulation as far as the whole thing goes. So they can charge whatever they want, they can say whatever they want, and there's just no accountability, or there's very little accountability in the industry as far as physical precious metals.
And so let's like hit on that, because I know Ryan just talked to a client just recently. They got called pushing actually a couple of them in like within a week, and called by a company, pushing them to put a bunch of their IRA in gold and silver, which we'll come back to that because I always say, first of all, we'll hit on this a little, like that's the last place I would, it's better to own the physical metals.
Right.
But they don't ask any questions. Like the one clients, of these two clients that called in the same week, one of them, they really need their IRAs for retirement income. Putting them in gold and silver doesn't generate retirement income. We can't do it. But there was no questions asked about what do you need or how do you want it. It was just you should put, half of your IRA into gold. Well, to me, that's exactly why you guys work with advisors and kind of adhere to a fiduciary standard, because it really has to do with each person
Yeah.
and what their situation is. Now, the other client could put some money into gold and silver. However, he has other sources outside of the IRA that makes more sense because he can own the physical metals. And so again, all these questions should be asked because it really becomes down to a fiduciary questions. But one thing Ryan said, and I wanted to see if you can expound on when he was talking to the one client, and I can't remember the company that was calling off the top of my head, but I'm sure there's dozens of them.
There are.
He said, if he put all that money in there, his account would probably be, half in no time. So can you really explain, like, yes, we know gold's we'll hit on gold, even though silver might be the best, but even though gold hit an all-time high, how could it be I invest in gold and my account's half the value? So can you just maybe talk about retail versus wholesale and kind of how these companies work?
Yeah, so some of those companies, and it's not true for all of them, but the one that you mentioned there, and there's story after story like this that comes through our office that a client gets a phone call or an email, or they start this conversation, and it can be IRA and it can be physical, it can be all kinds of different scenarios where they're buying. But the main thing that that Ryan mentioned, that they can lose 50% of their value, is it's the right off the bat pricing. So they'll sell obscure products that you can't shop as a normal client or a customer. You don't know what you're buying, um, and they may lure you in with a loss leader. They have many different tactics to get you in the door, to get you feeling comfortable, and then that's where they essentially take advantage of you with really high margins. We've had multiple people come in and say, hey, yeah, we love gold and silver, we bought a bunch from XYZ company, this is what we have, what do you think of it? And we just kind of bury our head in our hands like, oh no, we saw what you paid for this and it's only worth half of that today. And it's not because the market went up or down, it's because they took a 50% cut right out of the gate. um, and that's commonplace, unfortunately. You tend to think gold and silver that the margins are going to be razor thin against spot price and things like that, but once they get you in with that loss leader or something along those lines, that's when they start selling you obscure things with low mintage or rarities, things like that. That's where we see a lot of the scam, a lot of that 50% markup, a lot of the losses happen is that they're telling a story, and the story, unfortunately, is worthless. They aren't rarities. They're privately minted coins that nobody wants to buy back. They're only good to these types of companies that are selling them. A collector maybe might get some enjoyment out of them, but not for near the price that a lot of people end up having to pay for them. It saddens us when we have to go through that with a client, to educate them. That's not easy phone calls for you as the advisor to have, Michelle. It's not easy phone calls for us to tell them it's just not good news, and then to try to help them from there. It's tough. So that's kind of, I think, what Ryan was mentioning about with those companies is the 50% loss. It's in their margins. They're selling you something that's just not worth what they're telling you it is.
So it's kind of like, and I think that's the hard thing, because if you try to go on and just look at what the spot price is, it doesn't exactly reflect to what the price of a coin sort of say is. And so a lot of times people are at the mercy, so to speak, whoever is calling,
Yeah.
which is, I know why we've worked with you, because you'll tell us, and I think we've shared before, I think obviously anybody who does anything, like the way you get paid is through a commission, but the commission that you charge is very small, not 50%, and not saying what the coin is. And
Right.
it's really important to know what that, like I've said this a lot, we've said this in previous calls, but a silver dollar or a gold coin, that ounce is right, how much that the coin is how much it's worth. So I don't care if it looks shiny and new and has something sweet printed on it. The silver is the same. So if you're paying more for someone silver dollar than another, therefore you are collecting versus
Right.
investing, and that's where I think you're talking about where they get this and say, oh, it's worth so much. Well, maybe if you again, maybe if you found, like they used to say Beanie Babies are worth like how much, right? And
Yeah.
I've taken suitcases full of Beanie Babies to Haiti, which are really highly appreciated there for all our kids in the orphanage. But no one's selling a Beanie Baby for $20,000, But I do remember
Right.
when they talked about that, and it's kind of along the same lines. But they're in is that maybe kind of hitting it to a point because they're giving you collectors prices.
Right. Yep. I think you nailed it. That's why we've tried to get to a point where we've tried to take the guesswork out of it for you as the advisor and your clients. All the clients on here, we only sell one type of silver coin and one type of gold coin, and it's because it's the best product to own in your home or physically possess. Um, all the other stuff out there, there's reasons not to buy it, whether there's tax reporting on them, whether it's high margins, whether it's how they perform in an open marketplace with spot price going up and down. We just try to take all that guesswork out of it and sell one type of coin, gold and silver, because that's what's going to perform best for your clients.
And that makes sense. And so, for example, let's just, and granted, this is March of 2024, but as of today, what is a silver dollar coin? Like, what are they going for?
Yeah, right now a silver dollar is going to be in that 34, $35 price range right now.
And then what about gold? And I know you use gold coins too.
Yep. So the gold that we use quarter ounce, old pre 1933 gold coins. So they're quarter ounce, they're half ounce, and those are in the $650 range to $1,100 range, depending on which one you're looking at. And the only time we go between quarter ounce and half ounce is just basically on availability.
Yeah.
You know,
Makes sense. And so I think, at least that's a little bit, and we can always, anytime somebody calls, we can get what that price is and hit it out there and explain. And I don't want to go
Right.
into the detail today about, the difference in spot and, what you can get, but I just thought it's interesting to put it out there because the margins, as you said, is what really gets people. And when they're saying, I mean, so you just said what a silver dollar coin is. So if they're trying to sell one that's more, or trying to sell something that's specially minted, I mean, those are all things to be concerned about because again, I mean, I have a bunch of silver, for example, and some of them are nice and shiny and some of them are dull, and it doesn't matter, they're worth
Right.
the same, like
Yep, they are.
and if you're buying them to invest them, I have them hidden somewhere anyways. It's not like I'm out looking at them, right? So
Right.
it
Yep.
doesn't matter.
Yep.
So if someone's calling, I guess those are there, I say the buyer beware. This is the other thing that I think is, and I've heard someone say, oh, these big companies are selling out or putting everything, you should sell all of your IRA or put all of your IRA in gold. Usually it's gold, which is interesting because they
Yep.
hardly ever mention silver.
Yep.
Now I don't know if you have any want to speak on that, but when somebody is saying that you should sell it all and put it in because the market's going to crash or US currency isn't going to be worth anything, how would you answer that, that thought? Because I know as a fiduciary, it's not what you would recommend, even if it's in your business line. So how do
Yeah.
you
No.
answer that?
Yeah, no, they're fear mongering, unfortunately. They're trying to capitalize on that gold has hit mainstream media and they want to get you excited about getting involved. Um, I'd steer real clear of that, especially a desperate salesman or a pushy salesman. The old adage is true. If it's too good to be true, or if it's too good,
If it
if it's
sounds
too,
too good.
yeah, right, it's too good. So
Yeah.
it just doesn't work that way. I would be very cautious of talking with people like that. I'd be cautious of even taking their calls. If it's something you're interested, if your clients are interested, you need to be talking to Michelle about it. Um, there's I mean, just beyond margins, there's so many other scams to be aware of out there. There's, especially with IRAs, there's home stored IRAs where companies will tell you that you can take your IRA and you can turn it into gold and silver and you can possess it in your home. And, that's no big deal. We'll start an LLC under your name and we'll do all of this work for you. And that's a huge IRS no-no. We've spent thousands and thousands of dollars with tax accountants and things like that, trying to make sure that what we're doing is right as far as IRAs. And when we discussed home stored IRAs with them, because we had many clients that wanted to do it, the IRS frowns upon that. It's supposed to be, IRAs are supposed to be held by a third party. And just because you have an LLC with your name in it doesn't make it a separate party. That's you. And so they're getting them, the scams are even getting clients into IRS trouble because they're taking their IRAs and taking them home, and they're not taking their tax hits on them like they're supposed to. I had a call just the other day about a client that had talked to a pushy salesman that had bought metal from us. They were saying that you should open an account here and we'll hold all that metal for you, and you can borrow against it and you can do all this stuff for it. And even that's a scam. What do you think is going to happen to your metal that you are holding and you send it to somebody? You think they're just going to hold it for you because they're being nice? I mean, I get upset about it sometimes. I start thinking about all the scams that are out there. So when you get a pushy salesman on the phone like that, I'd hang up on them.
Yeah. Well, and I think too, here's the other thing that you just said, and we'll hit on. So if it is an IRA, which I mean, I know you guys have a very trusted, I guess we would call it a trust, right? That holds the IRA.
Yep.
But I think this is what I've said. I mean, I don't have truthfully any clients that own metals in an IRA, because if they can own metals, meaning we don't need all their IRA for income, because I always come down to my first job is to make sure you're going to have retirement income. I mean, that's what you need. We know you're going to need it. If we need most of your IRAs to create retirement income or your brokerage accounts or whatever, then there's not a whole lot left over, because while I believe gold and silver is a great place for wealth insurance, I can't create an ongoing income from it. I can't send you a check every,
Right.
every month. So anyway, anyone who usually can do it outside of an IRA, even if it means taking a distribution from the IRA, paying the tax, and holding the metals, because then it's in your possession, which we've talked about plenty of times on how possession's 9/10 of the law. But my guess is on some of these other things, if you want to hit on, like if they're talking about trying to get your IRA there, not only is there the price that you have to pay to get the metals, but then you're paying an ongoing management or oversight, however you would want to say it, for whoever is managing your IRA that's in metals. And so those are not all, I know you have done some due diligence to find a place, because you do have some clients that have it inside of an IRA. But do you want to, because I know that not everybody that way is clear and cut and easy to work with either.
Yeah, we use a company called Gold Star Trust. And like you mentioned, there's fees that go along with that. We use Gold Star Trust because they're one of the lower, have the lower fees in the industry. There's many out there, and their customer service is top notch, and which is really important for us and our clients. We work with other trust custodians, is what we call them, that hold metals and hold IRAs for clients, and they're nightmares to deal with, and they have insanely high fees. So a lot of times, like you mentioned, you'll get into an IRA and you will have paid astronomical margins right out of the gate, and you'll get your first statement and it's way down, and you're confused. You call in and you can't get a hold of anybody, and then you get a bill saying, hey, you owe X% on your account for the year because we're holding it in a trust depository for you, and here's the custodian fees, here's the depository fees, and you need to pay them, otherwise we'll start taking metal out of your account. So it's a costly way to own gold and silver, and it's definitely not my favorite. Like you mentioned, possession's 9/10 of the law. If you want it, you have it. If you have it in an IRA, it takes time to get it out. It's not as liquid as having it in your possession. And then beyond that, if you're working with custodians and things like that aren't that have no great reputation with them, it's a real nightmare. I mean, I was working on one today that we've gone round and round and round for about 2 months trying to get this small $12,000 IRA liquidated. And part of it is that we get forms in, and then they take too long to process them, and then they're outdated, and then we have to do it again. And we're finally to the point where we can liquidate their metals, and they're metals that nobody wants. They're 3/4 ounce silver horses, and they're just really random stuff that we're not able to get 50 cents on the dollar for. So it's why we do what we do. We know we're excited about doing it. That's why we use Gold Star Trust. They have low fees. Their customer service is the best. And we can get stuff done in a pretty short order with those guys versus some of the other ones that are just really, really hard to deal with.
Yeah, and I think that's a question. I mean, that's always good is, hey, what if I buy this from you and I want to sell it back? I mean, what would you pay me if I was selling it back?
Yep.
That's kind of an interesting question if they can't answer. Like, if I'm going to spend, for example, 50,000 to buy this, whatever, gold. If I turn around tomorrow and want to sell it back, if they can't give me like what are they going to buy it back for? I mean, that's kind of an important question. I think a lot of them, my guess is if you ask them point blank, are going to beat around the bush and not give you a clean answer on that, which is exactly a red flag. I mean, you can correct me if I'm wrong, but that's what I'm assuming, right?
No, you're absolutely right. And some will even go out on a limb and say they won't buy it back. They don't do buybacks. They only sell. And that's a huge red flag as well.
Yeah, exactly. Because if you're buying it, and especially if they're trying to push these huge amounts, I mean, liquidity is important,
Yeah.
and I know that, talking to Ryan, he's bought cars with gold or silver coins,
Yep.
but again, he has it in his possession, but you can't just take this, special horseshoe coin, as you mentioned. No one's going to give them extra. They're going to say,
No.
how much is this coin worth? And that's what you're going to get. And so very important things to kind of think about. So.
Yeah. Yeah.
Well, I know we just have a couple topics I'll hit on, but is there anything else and anyone can put in chats, anything in the questions? I know I've been hitting questions that we've had that have already just kind of come in. But if anyone else has any questions in the chat, you can do it. I guess the one thing I'll just hit on is the one question we have had is, is it true that, big companies or taking money out of the market and buying all up putting everything in metals, or is that something, or big investors? Because I know that's been something that's talked about. And I mean, personally, I thought if Walmart sold everything they had and put it in metals, there wouldn't be a whole lot of metals left. But
Yeah.
like, if you want to hit on that, or, is that just something people are talking about? Hey, I think a lot of companies, I
Yeah.
don't really think that's the case, but
Yeah, I don't think so. I think that there is some stuff out there that's quite interesting. I've seen that Costco of all companies is getting into selling gold bars, and they sold out nearly instantly. Um, I don't think that they're selling everything to be able to get gold bars, but so no, I don't think that large companies are dumping all their cash and getting into gold. I don't see that happening from
or
my
even large
perspective.
investors, probably, in my
Yeah,
opinion.
yeah. We have seen nations do that. We've seen China start storehousing a lot of gold, silver, and they've been doing that for years though. When we were kind of there, when they started messing around with the petrodollar and started trading oil and yuan and things like that, that's when we saw nations start stockpiling gold. But as far as big investors, big companies dumping cash, getting into that, I haven't seen that from my perspective.
Yeah, and that's why, I mean, we've talked about a percentage, usually 10 to 15% of your overall net worth is kind of a wealth insurance that protects you if the US dollar goes or whatever. But I mean, just
Right.
like when I have home insurance, I don't pay the same amount for home insurance as I do on my house, right? I pay a smaller amount that insures the value of the house. And that's kind of what your thought is on 10 to 15% in metals, the right way insures a larger amount. Is that what, if you want to hit on that at all quick, as we
Yep,
read?
yep, exactly. We recommend 10-15%. It's a hedge. When metals move, it's there's there's movement in the equity markets. It's kind of funny when Ryan and I sell gold and silver, we sell it to a client and say, hey, good job, Mr. and Mrs. Jones. We're glad you have wealth insurance now. Now we hope your metals go down in value. And they look at us kind of funny, and you're like, well, this is a 10 to 15%. We want your 85 to 90% to do really well. We don't want you to have to use your insurance. Um, that's why we've tried to coin that term wealth insurance, because it kind of gets your mentality changed from investment to insurance. This is to insure the rest of my portfolio if things were to happen. In 2008, a 15% allocation in a nominal $1 million portfolio, a 15% allocation of pre-33 coins that we sell, the gold and the silver, that leveled out that $1 million portfolio even in 2008 during that financial crisis. That's where we've come up with this mathematically, this 10 to 15% does a really good job insuring in times of volatility, and really just protects your purchasing power.
Makes sense.
Yeah.
Well, and then I think that probably would go along too with worry about the US dollar not being strong, which, I think there's a lot of talk on where we could use a gold-based currency again. I mean, my kids learn about that from the Tuttle twins, however, but, I think that should everything, should the US dollar just all of a sudden fall and there's nothing else, again, that 10 to 15% is the wealth insurance that helps hold.
Yeah. Yeah, no, gold and silver doesn't have to be a scary thing. I'm not trying to fear monger people either. I just, you want to talk to people that you trust about it. The clients that are on here, talk to Michelle about it if you're interested. There's no reason to be fearful of it by any means. It's just, you want to talk to somebody that has your best interests at heart and is fiduciary about it.
Yeah, which I think perfect kind of segues. The last couple of things is being a fiduciary and having like the whole picture in place is really important. And so as we kind of wrap up, I wanted to spend the majority of the time on this because I think it's a topic that is going to be hit, and it's going to, gold's going to keep going up probably this year, and it's just going to mean more calls, more scams, more pushy salespeople, and wanting to make sure we address that. But kind of on the flip side, as we see, we have interest rates right now are higher than they have been in a long time, which opens up opportunities in different ways. And one thing I'll just hit on quick is CDs, because March is historically, for whatever reason, a high month for CD renewals. And what I've been talking to people about is making sure that we're taking advantage of these higher rates for longer than maybe 9 months or, a year. A lot of times those CDs aren't that long in term. So it really becomes down to what is your goals for the money? I mean, if you're going to buy a house or build a house next year or whatever, take the money out, then it's fine. Lock it up for a year. But if it's more kind of, safety net money and money that you need, you want to be there long term, want to get some growth on it and have it if you need it, then putting it in at 5% for a year isn't really helping you that much in the long term, especially if interest rates drop. So, on the flip side, there's some fixed annuities that have over 5%, and you could do anywhere from as low as 2 years, but however, again, same issue, to 5 years, 7 years, 8 years, and still have some liquidity on that where you can take 10% a year with no penalty. So it's not like all locked up, but you're taking advantage for the higher rates for a longer period. So I think whenever you're looking at this, it is important to think, what is my goals or what do I need this money for? If it's, liquidity in the short term, then, a short-term CD is fine. If it's more, I need it to be there for the long term and kind of keep growing for me, then we want to take advantage of the interest rates for a longer period of time. If that makes sense. And that's, if you have any CDs coming due and you're not sure, give us a call so we can talk through it. Because again, if you can lock in, I mean, these are the best rates we've had in 20 some years. So if you can lock in 5% for 6 years or more, and still have some liquidity options, that might be a way better option than locking it in for a year in a CD. So very important if you're renewing CDs right now to look at the options and again, to think through what you're using that money for. If it's like a short-term needs, that's one thing. If it's more of a long-term needs, then we need to plan differently. And then the last topic I've hit on is, and we've hit on it a little bit in the last year, is, annuities, which we do a lot of annuities, and it's another way to take advantage of higher interest rates. But also on the flip side, when I kind of talk about buyer beware is sometimes people buy an annuity based on some guarantee that really isn't a guarantee that they're going to use. Two examples of that quick is on a variable annuity. People will think I'm whatever I put in is guaranteed not to be below that. Well, that is true on a death benefit, but not like your death benefit on a standard variable annuity is that what you put in minus anything you took out is going to be available. That's why they have this M&E charge, which is mortality and expense. However, your account balance is going to go up and down based on whatever investments that variable annuity is in. And so and if you grow, which is what you'd like it to do, right? You want it to eventually grow up, then you're actually paying a higher fee for zero insurance, so to speak, with that M&E fee on a guarantee that doesn't even matter. So, that's one that we see sometimes get sold the wrong way. The other one is on guarantees for income riders where, hey, you're guaranteed to make 7% a year. Well, you are for income, but not, if you want to take it all out in 5 years. And so it's important to know what it is. Honestly, we don't use any variable annuities. And on income riders on annuities, usually I'm only doing it if we're taking income right now. And this is what it is, especially with kind of the trends and how annuities have transformed over the past 20 years and what people are using them for. Unless we need a guaranteed income, we're going to go for something that has higher accumulation. We're going to take advantage of these higher interest rates for a longer time by having maybe a 10% cap on the S&P or something like that. But anytime you just need to know the more that's put towards any type of guarantee, the less money they have to work with to actually make you a return. So we have a report out, on using index annuities as kind of an asset class and what to look for. And that's something, of course, we do a lot of that. We've been doing a lot of refinance and reversed, we call it, but taking advantage of taking some of these old policies and taking advantage of the new higher interest rates to put you in better position going forward. So anyway, a couple of those topics I just wanted to hit on quick. So if you have any more questions on that, let me know. And what I love about Ryan, and usually it's Ryan who calls, but I'm sure you would do the same thing, Shafin, is that if a client has calls and has a question, I always say, hey, I know this much, right? I got a guy. I got somebody who is an expert in gold and silver. And like when Ryan called our clients back last week that was being pushed, he knew the company, he knew what they did, he knows what they're doing. I mean, and I'm sure it's the same with you.
Yep.
So if somebody's calling and trying to push this, I will probably set up a call directly with Ryan or Shafin to go through exactly what they're saying and kind of what are the red flags there. So I know enough to know that we have this for a reason and it needs to be part of a fiduciary kind of process. So anyway, well, with that said, I know we just went a couple minutes long. We'll have this recording out, probably put links in it. And I'm hoping that we do have more people that use gold and silver as the wealth insurance, but we just want to caution on, using it the wrong way. There's a right way and a wrong way to use everything, right?
Absolutely.
And I think it's true with any investment, just as we just talked about annuities, you should never put all your money in one, and in annuities and companies, make sure that you're not doing that. So if somebody is telling you to put all or a high amount into metals, that alone is a red flag because, as much as I hate the word diversity because it's like pixie dust in the industry. I mean, the concept of not having everything in this, and having things kind of set up with different correlations, which is, really gold and silver is, by being a hedge, it correlates and moves different than the stock market. That's important and maybe something we should just know. We don't want to put all of our eggs in one basket, even if it's full of golden eggs, right?
Right.
Anyway. All right. Well, anyway, thanks for jumping on. I'm sure if you have questions, we'll get a call scheduled. And thanks, Shafan, for jumping on when your business partner is on his way on a southerly journey today.
Absolutely. I'm happy to do it for you, Michelle.
All right. We'll talk to everyone later. Have a good day.
You too. Thanks.